stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo again to talk about growth stocks, and we're keeping it basic. I did a screen to look for the Zacks number one ranks. Those are the strong buy stocks. That's our highest rank. And growthiness. And all it gave me, 52 stocks. Obviously, that's too many stocks to cover here on this podcast, but I'm going to cover 5 of them, just ones I plucked out of the list. And there are a lot of interesting names on there. I don't look at growth stocks all the time because, as you know, I run the Value Investor podcast as well as this podcast, The Market Edge. And so I'm looking at value stocks over and over and over again. But I love the growth names here. There are a lot of them, obviously 52. Now, remember the Zacks rank, we usually have between about 220 to 240 stocks as the number one ranks at any given time. We're wrapping up earnings season now, so that means a lot of changes to the earnings estimates, and that's what gets you the number one rank. Remember, the rank is based on analyst earnings estimate revisions. So when a company reports, if it beats and raises its guidance, usually, as we know, the analysts will go in there and have to raise their estimates to match whatever the company is now giving as the guidance. So you have all of those estimate changes coming in. The Zacks consensus will rise. And that is what we're trying to capture with the Zacks rank. Something good is usually going on at a company when the earnings are on the rise and when the analysts are all in agreement about it. So that's what we're looking for. When I ran this screen, I want companies that are raising those earnings estimates. Now, I'm also hearing a lot of chatter this earnings season that most of the growth in earnings is only coming from tech and mostly the AI names. And without a doubt, we're seeing tremendous earnings growth and sales growth with the AI names right now, especially on the data center side. But just looking at this list of 52 stocks, there's more than just the AI names here. And I tried to pick out a couple of companies that were not AI related at all so that we can kind of see what's going on with these names here in 2024. Why do they have the growth? And some of them, it is also tremendous growth without the AI. So I'm kind of taking some pause with those who say it's only AI here in 2024 because I'm seeing a lot of growth in these other interesting names as well. So without further ado, let's just dive right in and see what are these top Zacks number one ranked growth stocks and should you be diving into? Let's take a look. So the first one out the gate is Wingstop. I like all these big restaurant chains right now, believe it or not, even though some of them are partially struggling perhaps. But it all depends on the price point, the product, and Wingstop has both. So what I like about Wingstop is that it's still really affordable. They're not really talking about how their customer is trying to trade down or is coming less times. I was just recently at a Wingstop in Columbus, Ohio, and that was the first time in a long time. It was busy. It was at dinner time, and I actually went in the store. I did not have it delivered. And I was surprised at what I paid for just like a single meal. It was much more affordable than I thought. And that included my drink. It was, only like $11 or $12. That was a lot cheaper than what we're seeing at a lot of these other similar fast food chains right now. So Wingstop, it's got the Zacks number one rank. I brought up the detailed estimates page here at Zacks. It is not cheap. It's got a forward P of 112 right there. That's pretty high, but we don't care. We're not looking at that. We're looking at the growth, and the growth is here. So 2024 sales expected to be up 27%. And here's the earnings up 36% to $339 from $248 last year. Next year, another healthy 22% on the earnings side. So nice double digits is what the screen is looking for. It looked for last year's growth, and then this year's growth. So both of those have been good, and next year is also looking good here. We have if you scroll down, you'll see the agreement, and that's where you can see what the analysts are actually doing. So we have 9 estimates higher in the last 30 days. That's off of its last earnings report. And also for next year, they decided, if it's good this year, we're going to try it for next year too. And they raised for next year as well. So what does this look like on the chart? That's what I like to look at. So over on the left-hand side under charts, there is price and consensus. That is my favorite chart. I'm clicking on it and you can see this double-digit earnings growth reflected in the chart. This is what you want to see up and to the right is what you want to see. The shares busting out to new all-time highs. They're up 49.7% year to date. They now have 2,279 restaurants. So they are growing the restaurant chain quite quickly here. And domestic same-store sales growth, that's a key metric for restaurant chains. It was up 21.6%. That's the highest I've seen any restaurant chain do this earnings season, much hotter than even Chipotle, which is also crushing it. But any restaurant chain doing 21.6%. So what does that actually mean when I'm saying that? That means last year they did sales at a store. This year, a quarter, in the first quarter, they were doing 21.6% more than a year ago. So that's year over year growth is what it depicts for the same store. And that's an incredible number. It's even if you're doing 5%, that would be considered to be pretty good for an old store that's kind of just, has been there a couple of years. But to average 21.6, this is on their domestic stores only. But that's just a tremendous number. And they said it was mostly from transactions. It wasn't because they raised prices, 30% or something, and that's how they're getting that increase. It was from people coming in and more transactions. But like I said, Wingstop is pretty much a value play here in the world of fast food. You get a lot of bang for your buck when you go there. You can tell I really like the food, right? Who doesn't like wings? We all do. And they've got some really great varieties. They have the boneless and the bone-in. So pick your flavor and go from there. But I'm a big fan of Wingstop. I just wish it wasn't trading with the PE quite that high. But that's Wingstop, ticker WING. Okay, then we are switching over to the AI trade because we have to include at least one, right? And I chose, I'm getting the ticker wrong, Super Micro Computer. Super Micro, it is ticker SMCI. And this has been a wild year for the stock. It's been up more than NVIDIA year to date. I had to look it up. It's 227% now year to date. NVIDIA's up almost 100% year to date, which is also outstanding and kind of crazy if you think about it. But Supermicro now up 227% year to date. But it has the fundamentals that maybe do justify paying, this higher price because the shares have gone up for Supermicro going forward. Its revenues are also up from last quarter, fiscal third quarter, 200% year over year. You almost never see that with any company. I mean, it's not even just doubling the revenue, but up 200% in a single year. That's what's crazy about this story. So let's take a look at Supermicro's detailed earnings. I'm clicking on it and you can see as I scroll down, it's obviously Zacks number one rank. PE is at 38. So not quite as crazy as Wingstop on the PE levels. But here we go. Sales for this fiscal year expected to be up 109%. That's insane for the entire year. And then next fiscal year, another 60%. We'll see if they do it. They did just report third quarter fiscal year. So we're going to have one more quarter before we get to 2025. But look at these earnings estimates, up 99% for this fiscal year, up another 44% for next year, expected to make $23.51 this year, versus 1181 from last year. And then just scrolling down, you can see the analysts are still bullish, 4 estimates higher in the last 30 days and 3 for next year in the last 30 days as well. Someone is actually cutting for next year in the last 30 days. So we had 1 cut. So maybe they're getting a little too bullish for next year, but $34 expected for next year, $23.51 for this year. These are incredible numbers. Now let's see what it looks like on the price and consensus chart for super micro. And now you can see we did have that big pullback from earlier in the year when the shares hit new highs. Was this a buying opportunity? It's gone from a little over $1,100 to back under $800 briefly, and now it's back over $800 per share. But those earnings soaring. It is in partnership with NVIDIA. It does data centers. It does the services for it. So this is the hot area, and I'm liking this growth as long as it does it. So that's super microcomputer, ticker SMCI. Okay, then what do I have next? Oh, this is one I haven't really been following, but a friend mentioned it and said it had the #1 rank, and then it showed up on this screen. So I thought, why not? Let's talk about it. It's Medpace, ticker MEDP. Medpace. This is actually a big cap company. The stock is trading at $395. It is the Zacks #1 rank, but this is a big growth play. So let's take a look at these detailed earnings estimates for Medpace. Now, what does Medpace do? I had to go look it up because I figured some kind of medical company because it's got med in there, obviously, haha. But taking a look at what they said on their website. So I'm reading this off. It says it does clinical contract research, which provides phase 1 through 4 clinical development services. And this is to the biotech industry. So that's an area where if you are going to be doing the clinical trials and you need help, basically, you call in Medpace. So looking at it, PE 35 times here on the detailed estimates. That's what I would expect from a lot of these growth names. That's why we're picking it. We want the growth. We don't care what we pay for it. Sales here in 2024 expected to be up 14.9%, nice double-digit sales growth. And then earnings, 27.1% for 2024. Looking for 1129, and it made 888 last year. So nice big earnings growth there. Next year, looking for 16.4%. So also another nice double-digit earnings growth for next year, up to 1313. And over the last 30 days, 3 estimates higher for this year, 2 for next year. I'm liking all of that. And that's what we want. That's what we expect to see with the Zacks #1 ranks. The analysts are revising those earnings estimates higher. That's how we get here. And let's see what it looks like on the price and consensus chart, my favorite chart, as I keep mentioning. Price and consensus up and to the right. Look at Medpace's chart. It's a very nice looking chart, and that earnings growth is actually widening here a bit for 2024 and 2025 compared to just a few years ago. You can see the more narrow, tight range of the lines in the prior years. That's not bad either. It's up and to the right, just slightly smaller amount of growth than what we're having here now. And you can see the shares are busting out to new, I'm assuming these are all-time highs here in 2024, but did I write down? Yes, year to date up 28.4% for Medpace. So a little more reserved on the stock growth, but trading at 35 times. So that's a nice, PE level for a growth stock. Cash, they have $407 million in cash, and they have a share buyback. They have 308 million left on the share buyback. So shareholder friendly, they've got plenty of cash, nice double-digit sales growth and earnings growth. That's Medpace, ticker M as in Mary, E as in Edward, D as in David, P, MEDP. is the ticker. I'm writing that down so I keep it in my mind because this is new to me, this one. And so we got some medical side of things going there. I didn't know, what I would find. Again, when I ran the screen, I was assuming, it's going to be mostly tech, but it really wasn't. And Medpace is one of those that is in the other category. Okay. Another one on the, I don't know if you call this medical. It kind of is, but it's more wellness. I guess that should be its own category. It's Hims and Hers Health, ticker HIMS. And if you're listening to this here in May of 2024, you know that this company has been in the news recently because they just announced they're going to start to offer the, I'm reading it out, GLP-1 injections for weight loss. And this is the kind of poor man's way to get the weight loss injections. And these are only going to be $199. So that's a lot cheaper than, the other big name drugs that you get from the other big pharmaceutical companies like Ozempic, which can run well over $1,000. So this one, $199 for the injection set. And that's going to be extremely popular, right? But otherwise, outside of the injections that they just announced, Hims and Hers Health has been crushing it on the business side. Let's look at those detailed estimates. So what is Hims and Hers Health? It falls under the industry of medical info systems. I see here on Zacks. You can see it up at the top of the page when you put in the ticker by the industry rank. And this is just a wellness platform. You subscribe to it. You pay $55 a month. You get wellness information and assistance on it. And first quarter revenue was up 46%. So they were already crushing it before announcing the weight loss injection news. And subscribers up 41% to 1.7 million. So there is a demand for wellness platforms, basically, and people willing to subscribe to get it. Now, free cash flow in the quarter, 11.9 million versus 7 million from a year ago. So that's gone up as the number of subscribers has gone up. And year to date, the shares were already up considerably before they made the weight loss announcement, but they shot up on that announcement as well. So now they're up 103% year to date. They have 106 million in cash. So I like companies that have the cash, and Hims and Hers does. So what does it look like? Valuations sky high, 103 times. But you are paying high valuations for anything related to the weight loss drugs. And this one is no different. Sales, as we know, expected to be up 40% for the full year. But like I said, in first quarter, up 46%. Next year, another 24% on the sales growth side. Scrolling down, earnings estimates expected to be up 263% this year. They had a loss of 11 cents last year, expected to see a gain of 18 cents this year. Next year, almost doubling that to 32 cents, up 80% for next year. So they really are starting to pick up momentum in their business model now. And the injections is only going to make it more bullish and crazy. 6 estimates higher for this year and next year, none lower. Not surprising. Got the Zacks #1 rank, strong buy. What does it look like on the chart? We're going over the price consensus now, and I'm expecting it to be pretty crazy. Yes, up and to the right. But now that these analysts are really raising those earnings estimates for this year and next year in a very strong way, you can see it busting out suddenly this year and moving higher along with the shares. Not yet back to 2021 highs. It went IPO a couple of years ago, it looks like, or, went public. And then it busted out to new highs in 2021. Maybe during the pandemic, it got a lot of use, but then came way down, and now maybe back on the scene, this stock. Hims and Hers Health is the name, ticker HIMS, HIMS. Then we're going to wrap it up with a food selection. So this one is interesting. I haven't really done a deep dive into it, but it is growing those earnings pretty quickly. And it is Vita Coco, ticker, I think it's Coco, COCO. Whoops, I'm doing the zeros in there. That doesn't help. On the ticker on the quote page, COCO, yes, COCO, Vita Coco Company. This is the coconut water company. And I kind of like these new drink and beverages types of companies because it does remind me of Monster Beverage and Keurig Dr. Pepper, Snapple from back in the day. We used to have Tazo Tea, which was bought out by Starbucks. There's a lot of these kind of beveragey names that get kind of hot, and you can get some really good growth names this way. So Vita Coco is trading with the forward P of just 26 on the detailed estimates page. That is the lowest of any of the stocks we've seen so far today. I'm on the quote page. But if you go over to the detailed estimates page, you can also find the PE, and that's 26. So what is the growth looking like here? So for 2024 on the sales side, it's just 3.5%. So that is a lot lower than what we've seen with any of these other growth names. Next year, expecting double digits, back again at 10%. But you can really see maybe some maturing of the business here as the sales growth slows. But on earnings side, expected to be up 37% to 102 from just 74 last year, and then another 13% for next year to 116. I'm liking that growth on the earnings side. Analysts are still bullish for the full year, 2 higher for this year, 5 higher for next year over the last 30 days. But you do see some quarterly estimates being cut a bit here. 1 estimate for the upcoming quarter and 2 for the final quarter of the year. So the analysts just kind of trying to right size their estimates. I believe that they did they raised some of their guidance for the following year too. They, I thought they did. No, maybe not. Oh yes, they did. I thought I wasn't imagining things. They did raise full year guidance when they reported their last quarter. So that's why you have some of the analysts, messing around with what their estimates are. But they didn't lower at all for the year, for this year or next year. And that's what the Zacks consensus looks at, or the Zacks rank. And they look at the consensus for the full year. So that's all looking pretty bullish. The analysts are in agreement, and the company itself is seeing better days ahead. So we like all of that. Now, first quarter sales were only up 2%. That's why we're getting that 3.5% sales growth for the year, because it is pretty slow right here. But they are very shareholder friendly. They have a share repurchase plan of $40 million from last October 2023. They've done $10 million of it so far, so that's bullish. I do like share repurchase plans or dividends. They have no debt, and they have cash as of March 31st of $123 million. Now, that is down from the end of December, when it was $133 million. So they did spend $10 million of their cash somewhere along the way in the first quarter. So cash burn is something you do have to watch with a lot of growth names, but it's not something that's totally putting a red flag up for me right now, because I do like that, it has the no debt side of things. Now, they did say that their full year gross margin is going to be between 37% and 39%. I love that area of gross margins. That is outstanding. But they have uncertainty on ocean freight routes, and that will be affecting margins beginning in the second quarter, and then maybe reducing itself from there. So this is the first company that I've seen talking about supply chain issues again in quite some time. We had very high freight costs. We had companies flying in product instead of shipping it from China or Asia because of the bottlenecks and the supply chain issues that were going on during the pandemic. But that mostly righted itself. But maybe it's tightening up again in terms of, supply demand metrics. And the freight companies are now starting to be able to, raise prices a bit on what they're charging. And so we're going to see some higher costs coming for some of these transportation costs. But it's still early, and this is the only company I've seen so far talking about this. So I'm going to keep an eye on it myself. But that is an area that could impact as we move forward here throughout this year. So keep a watch on that. The global economy is a difficult system, right? It has a lot of moving parts, and now products are shipped from who knows where on other sides of the globe. And, things don't always run exactly as planned, as we know. So Vita Coco Company, I'm going to try some of their products. I wrote them down here. So they do have the coconut water. That's the Vita Coco. That's probably what most of you have tried if you've tried their drinks. They have a clean energy drink called Runa. They have an enhanced water called Ever and Ever. But this last one is one I'm interested in. It's protein infused, and it's just called Power Lift, but it's PWR. Power Lift in all caps, because you're lifting, you're working out, you want that protein. That's what it sounds like, that's what it looks like. That's good branding, I feel, to put it all in caps like that. But some of these drinks sound intriguing, and I always say, if you're interested in the company, you should be using their products, or as much as you can. Obviously, super microcomputer, I'm not using their data center services right now. But with some of these other ones, you can go to Wingstop. You can get the Vita Coco. You can, I guess the other ones, I could sign up for Hims and Hers, right? I could do a monthly trial or whatever they have over there for their platform. And so most of these, the Medpace, I guess I can't really try that out either because I'm not doing a drug trial right now. But a lot of these companies, you can try them out, and you should before buying. What makes them so great? What makes them able to have double-digit earnings growth right now, and in many cases, double-digit sales growth? I need to know. And these are hot stocks in general, all with maybe the exception of Vita Coco. This one is only up year-to-date 3%. So, but over the last 2 years, up 153%. So a lot of the good news sounds like it was already kind of priced in, and it's maybe waiting for another surge of, something good going on before investors are willing to dive in at even 26 times. But I'm going to keep this one on my watch list because, again, I do really like the beverage companies and these kind of product companies in general. So that's Vita Coco, ticker COCO. So that's the 5 stocks that I picked. There were a lot of the other data center stocks on the list, as you might think, because that is where the analysts are raising their estimates, but not exclusively. One of the interesting names I did see on there was Royal Caribbean, the cruise line company, ticker RCL. You might want to go check out that one. And as always, on Zacks.com, even if you're not a premium member, so premium subscription at Zacks allows you to see all the lists of the number one ranks. You can just we have a whole list. You just click on it. But if you don't want to be a premium member, we do a Bull of the Day article every day, Monday through Friday on the site that is always the Zacks number one ranks. So if you want to do the cheater's way of trying to find the Zacks number ones, you can go there and click on that article because you might see some interesting ideas there. Yes, there's very prominent names that are also Zacks number one ranks. I think Alphabet might be one right now, but you don't need the rank to tell you what Alphabet is doing, right? But you might need the rank to tell you about Hims and Hers or Medpace or maybe even Wingstop. Maybe you're not thinking about Wingstop or you've never been there. So the Zacks rank is good at uncovering these companies where something good is going on. So use it to uncover them like I do. But if not, listen to these podcasts. I cover a lot on the Zacks rank, on the Market Edge podcast, but also on the Value Investor. So if you're a value stock investor and you're interested in the top number one ranked stocks, go over to the podcast and check out some of those, because I do run a lot of screens on that podcast. You can get the Value Investor podcast on Apple. It's also on Spotify. You can get it on YouTube, but it's just audio. But go to Zacks Podcasts in the YouTube search bar, and you'll find all of our podcasts over there, except for this one. This one is done through the audio version, and it's on our normal Zacks investment research page. So go to just Zacks.com/YouTube to get it on the YouTube version. Otherwise, it's on Apple and Spotify. So let me recap our tickers again. So we had Wingstop, ticker W-I-N as in Nancy, G, W-I-N-G. And then we had Super Microcomputer, ticker S as in Sam, M as in Mary, C as in Cat, I, SMCI. Then we had Medpace. Sorry, I've been calling it wrong like half the show. Medpace. It should be Medpac. That sounds kind of good, doesn't it? But no, it's got the E at the end. So Medpace, and that's ticker M as in Mary, E as in Edward, D as in David, P as in Paul. Medpace. Don't leave me any messages on the YouTube comments talking about how I'm saying it wrong. And then Hims and Hers Health, ticker H as in Harry, I as in I, M as in Mary, S as in Sam, HIMS. And then Vita Coco Company, it is Coco, and that is ticker C as in cat, O, C as in cat, O, Coco. So as always, again, subscribe somewhere to get our podcast, but get us somewhere. And I'll see you again next week with some more stocks.